So lately, I've been seeing more and more posts claiming that AI market in 2025 is overheated. And I decided to dig into this and see what's actually going on. Here's what I found. Big tech companies are throwing insane amount of money at AI right now. Microsoft is spending around $80 billion in 2025. Google is putting in about $75 billion. Overall, we are talking about investments that have already crossed 370 billion. But here's the thing, data centers aren't being built fast enough to match all these spendings. The economy is still growing at the same pace as it was before. Now, here's something really interesting. According to Yale Insights, more than 60% of all venture deals in US during the first half of the year went to AI startups. Everyone's rushing into the same space at the same time. And the forecast for 2026 says over 500 billion will go into chips and servers, not into things that actually help businesses run better, just chips and servers. More than half of major investors are already calling this a bubble. In November, we saw tech companies take a dip. Another concern, way too much depends on just a few players like Nvidia and OpenAI and couple others. If something goes wrong there, everyone feels it. But there is a big blocker that not everyone's talking about. You can't build new data centers and produce new chips at the same speed you write the checks. It's just a physical limitation. You can have all investment money in the world, but if the infrastructure is not there yet, if the facilities are not built, if the chips are not manufactured, nothing happens. This is one of the main problems why expectations are not matching reality. People simply can't get results until those data sensors are built, the models are trained, and new AI tools start producing real return on investments. Companies were expecting quick results. The forecast promised that AI would add 1.5% to productivity this year. But nothing like that is happening yet. The economy is growing at the same speed as before the AI boom started. All these investments are creating jobs in construction and energy, which is great, actually, right? But we still don't have many AI products that truly change how companies work day to day. Right now, AI is creating way more noise than it's helping businesses earn more and operate faster. Around 30% of companies are planning layoffs because of AI in 2026. But here's the reality, AI is not powerful enough yet to replace people on a large scale. Real changes will only start happening after the market cool down and it becomes clear what actually works and what doesn't. Here's what I see. There is way too much money floating into AI right now, and way too little real impact for businesses. The technology simply is not keeping up with expectations. But even if this is a bubble, and it might be, it's not a useless one. There is a research that shows that for every dollar invested in venture capital, technology, the economy gets somewhere between $2 and $5 back through direct impact, through construction, energy, and job creation. And even when 90% of these startups burn out, and they will, right? That's just the statistics. The economy still benefits. When all the noise settles down, the companies left standing will be the ones that didn't just buy yet another AI subscription and call it a day. They will be the ones that actually changed how they work. The ones measuring what works, adjusting the processes, and see real returns. AI won't save a business that is not working well to begin with. It simply gives an advantage to those who are really strong now. And those are the companies that will gain the most once the hype calms down. So I'm curious about your experience. Do you feel this overheating in your industry, or are you already seeing real results in your work? Drop your thoughts in the comment below.